It is now time for our focus on the N11 countries. After the BRIC countries, there are 11 nations that could become the world's largest economies in the next few decades. Those include Bangladesh, Egypt, Indonesia, Iran, South Korea, Nigeria, Pakistan, the Philippines, Turkey, Vietnam, and Mexico. Natalie Carney reports on the outlook for Turkey. Historically a gateway between Europe and Asia, the nation has benefited from its own financial reforms and China's economic growth.
ZTE, the Chinese telecoms giant, has been operating in Turkey for the last decade. General Manager İsmet Göktuğman says despite Turkey's rough economic shape a decade ago, the country's geography, sizable population, and emerging telecommunications market were all enticing investment factors.
The last 10 years, the GDP's average growth rate is almost 5.2%, which has helped Turkey grow and which also helped each sector grow.
While there were initial challenges, ZTE has been seeing noticeable profits in the last 5 years.
Turkey and China have agreed to boost bilateral trade to $100 billion by 2020 from the nearly $30 billion they're at currently. Yet as one of the largest buyers of Chinese products, Turkey is a bit concerned about the imbalance in that trade, seeking more ways to entice as much foreign direct investment as possible. And with an increase in both economic and political stability here in the country, it seems that more and more companies are heading this way.
But it's not only the Chinese buying into Turkey and the government's incentives.
Since in 2011, direct foreign investor to Turkey is around 16 billion USD, and which in 2012 also is going to reach around 18 billion USD.
And that is likely to continue, according to business consultant Kemal Kılıçbey.
Political stability. When there is political stability, foreign investment comes. And our financial stability is very high. The risk comes from outside Turkey, like Europe. So we don't have internal risk.
Yet credit rating agencies have limited their investment upgrades on Turkey due to its high inflation and current account deficit. And while economic growth for this year is expected to fall shy of a 3% target, the OECD and IMF still forecast a rather healthy 4.5% annual increase for the next decade.
Growth has been really above expectations. So I think despite that fact that there has been more investment in Turkey. So that means people trust, companies trust, foreigners trust Turkey.
With expectations of developing countries outperforming the West in the years to come, Turkey's geographical placing and a member of the N11 will not miss out with these turning tides. Natalie Carney, CCTV, Istanbul, Turkey.